vulnerable should a high-powered quantum computer emerge. But some of those can be changed faster than a system that is inherently decentralized and inherently resistant to rapid change. And then even when you do the change, if you, for example, if you introduce a new address type, it takes time for existing coins to migrate over to that. There's only so much throughput that Bitcoin can do. And so you generally speaking want to get that change earlier than later.
For years, Bitcoin's greatest strength has been its resistance to change. No central authority can rewrite the rules. No CEO can push through an upgrade. No government can simply alter the protocol to suit its own interests. That immutability is exactly why millions of investors trust Bitcoin as the world's first truly scarce digital asset. But what happens when change is actually needed? What happens when new technological threats emerge, when controversial applications begin consuming block space, or when developers disagree on what Bitcoin should be used for in the first place? The growing debate inside the Bitcoin ecosystem has exposed deep divisions between developers, miners, companies, and longtime Bitcoin advocates. At the center of the controversy is a proposal known as BIP 110, a proposal that supporters say would protect Bitcoin from spam and blockchain bloat, while critics warn it could undermine some of Bitcoin's most important principles. And the timing couldn't be more critical, as Bitcoin enters what many investors hope will be the next major phase of adoption. Another challenge is beginning to loom on the horizon: quantum computing. While some dismiss the threat as decades away, others argue Bitcoin needs to begin preparing now. And according to Lyn Alden, one of the most respected macro analysts in the space, and now someone actively building a Bitcoin treasury company, the real challenge isn't just whether Bitcoin can adapt. It's whether a system designed to resist change can adapt quickly enough when it eventually has to. Today, we'll break down Lyn Alden's latest warning: why Bitcoin's resistance to change could become both its greatest strength and its biggest vulnerability, and why the battle over BIP 110 may be revealing a much deeper conflict about Bitcoin's future. But before we dive in, if you enjoy in-depth Bitcoin analysis that cuts through the noise and focuses on the big-picture trends shaping the market, make sure to hit that like button, subscribe to the channel, and turn on post notifications so you never miss an update. With that said, let's hear more from Lyn Alden.
Do you agree with BIP 110 supporters that inscriptions and similar data on the Bitcoin blockchain are quote-unquote spam?
I'd say for the most part, I do view that as spam. A lot of it is just speculation. I think that the amount of utility that has been used for Bitcoin's non-monetary space has been low. So, there's that gets to a philosophical question. It's like, if you pay for it, is it spam? Generally speaking, for a network that is designed primarily to be a money, I would consider that spam. Um, one thing you mentioned is that it keeps arbitrary data out of Bitcoin. That the challenging part of BIP 10 is it's not even fully the case. It limits op return. There's still ways to put a lot of non-monetary data into the blockchain, especially through the more inscription route, so into that kind of witness of the blockchain. And that's actually one of the biggest criticisms that opponents of it have, or those that might even be sympathetic to the cause of adding costs to non-monetary data in the blockchain. They might say that this doesn't necessarily solve the problem; it just kind of moves the problem around. And then, of course, there's different debates within the Bitcoin space. Are certain types of how that non-monetary data is organized better or worse than others? Like, if you break it into chunks, does that fix it, or is it still a problem? That's kind of the ongoing debates. In general, I think it's one of those things where there are reasonable concerns that the proponents of that BIP have, about either illicit material winding up in Bitcoin, or just the overall kind of bloat that can happen. But I think that anytime you try to rush a soft fork in Bitcoin, I think one of the biggest single attribute of Bitcoin that brings a lot of us to it is it is very, very hard to change. If Bitcoin was easy to change, that kind of makes its sound money aspect reduced. So I think the fact that Bitcoin is very resistant to changes, there were those just a couple years ago that really tried aggressively to make Bitcoin more expressive, to take on just more kind of script expressivity in Bitcoin, and that kind of ran into a wall of not going to happen, at least not in that time frame. And now it's kind of interesting that we're seeing kind of at the other angle, which is how to make Bitcoin even more conservative in some sense. And so I think there's a long-term discussion to be had around non-monetary data in Bitcoin. But in general, I view some of the marketing around the BIP to be somewhat disconnected from what is the actual the BIP is kind of able to do on a technical level as it relates to non-monetary data.
Okay. And of course, I have to ask about the quantum threat to Bitcoin. How do you think about that?
Good question. I would separate the different concerns. So I view Satoshi's coins as less of a concern than most because we're talking about 5% of coins, roughly speaking. And then there's a number of lost coins as well. I view that as a volatility event more so than existential. I think the bigger topic is the other one you brought up, which is that, and that I mentioned in the prior question, which is that Bitcoin is very resistant to change. So there's a lot of systems that are quantum vulnerable should a high powered quantum computer emerge. But some of those can be changed faster than a system that is inherently decentralized and inherently resistant to rapid change. And then even when you do the change, for example, if you introduce a new address type, it takes time for existing coins to migrate over to that. There's only so much throughput that Bitcoin can do. And so you generally speaking want to get that change earlier than later. Uh, I do think it's a good thing that there are researchers working on this problem. One of the worst things you can do is overestimate the threat and then rush a solution because quantum resilient signatures are still evolving. It's still not clear what the best one's going to be years down the line in terms of what is most data efficient, what is most resilient to the attacks, what has been kind of fully vetted. And so putting in one that is maybe not up to par in a number of years, just to get one in there, could be worse than doing nothing at all. So I am glad that people are working on it. I don't view it as a near term risk in say 5 or 10 years, like some of the really big quantum bulls do. I do think that there's a much bigger difference between kind of theoretical growth in this field and actually bringing a cost effective quantum computer to market at this scale. Generally speaking, the hardware takes longer than kind of many people think when they're just kind of theory crafting it. But I do think it's something that can't be fully dismissed. And I've talked to some of the people that have they're the ones working on the BIPs to eventually add quantum resilient signatures to Bitcoin or other solutions to make it more resilient. And I for one am just glad that there are people looking into that to hopefully have solutions in place well before we need them. And that we've vetted kind of all the possible things that we could do to find whatever signature types are the best for it rather than just kind of the first one that we rushed.
For those not entirely familiar with the ongoing discussion, here is a quick breakdown. The immediate debate centers around Bitcoin Improvement Proposal 110, better known as BIP 110. The proposal was authored under the pseudonym Dathan Ohm and drew heavily from ideas long advocated by Bitcoin Knots maintainer Luke Dasher. At its core, BIP 110 was designed to temporarily restrict the ability to embed arbitrary, non-monetary data into the Bitcoin blockchain. Specifically, the proposal targeted techniques commonly used by ordinals, inscriptions, runes, and other data-heavy applications that have become increasingly popular over the past few years. Supporters argue that Bitcoin was created to be money, not a storage layer for images, tokens, or speculative digital collectibles. Their concern is that these applications consume valuable block space, increase blockchain growth, and potentially make it more expensive for ordinary users to transact on the network. Under BIP 110, several existing methods of embedding arbitrary data would have been significantly restricted. Transaction outputs would be limited in size, op-return data fields would once again face tighter limits, and various witness data techniques commonly used by inscription protocols would be capped at 256 bytes. Supporters view these changes as a way to reduce blockchain bloat and reinforce Bitcoin's monetary purpose. Critics see something very different. Opponents argue that BIP 110 crosses a line by attempting to invalidate transactions that are currently considered valid under Bitcoin's consensus rules. They warn that once Bitcoin begins deciding which fee-paying transactions are acceptable and which are not, it risks introducing subjective standards into a system that has historically prided itself on neutrality. Jameson Lopp describes the proposal as a potential threat to two of Bitcoin's most important characteristics: censorship resistance and predictability. Michael Saylor goes even further, arguing that there are far greater threats facing Bitcoin than blockchain spam, and warning that changing consensus rules over this issue could create a dangerous precedent. In Saylor's view, the bigger risk isn't inscriptions themselves, it's establishing a framework where valid transactions can later be excluded, simply because a particular group finds them undesirable. Meanwhile, Blockstream CEO Adam Back emphasizes a different point. Bitcoin's design intentionally makes change extremely difficult. If enough people truly want different rules, they are free to create a fork. But Bitcoin itself is unlikely to follow them unless overwhelming consensus emerges. And that's where the debate becomes fascinating. The dispute isn't really about a few JPEGs stored on-chain, it's about who gets to define Bitcoin's purpose. Should Bitcoin be optimized exclusively as money? Should users be free to utilize block space however they choose, as long as they pay the market price? Or should developers actively intervene when certain uses of the network begin creating unintended consequences? Those questions have no universally accepted answers, and history shows just how contentious they can become. Many Bitcoin veterans have compared the current BIP 110 controversy to the block size wars of 2015 through 2017, one of the most divisive periods in Bitcoin's history. That conflict ultimately led to the creation of Bitcoin Cash and later Bitcoin SV after disagreements over how Bitcoin should scale. Now, years later, another ideological battle is emerging. Even Samson Mow, who has publicly expressed concerns about blockchain spam, opposes BIP 1110 because he believes changes to Bitcoin's consensus rules require an overwhelming level of agreement across the entire ecosystem. In his view, forcing through controversial changes without broad support risks creating more damage than the original problem itself. And perhaps that's exactly the point Lyn Alden is making. Bitcoin's resistance to change is not a bug, it's a feature. It's one of the primary reasons institutions, corporations, and nation-states can trust the network in the first place. But that same resistance also means that when legitimate challenges eventually arise, whether that's blockchain bloat, future scalability concerns, or even the distant possibility of quantum computing reaching consensus becomes incredibly difficult. The good news is that BIP 1110 appears unlikely to move forward. Miner signaling has remained extremely low, with support hovering around just 1%, suggesting there is currently nowhere near enough backing for activation. But the larger questions raised by this debate aren't going away. As Bitcoin continues to grow, the network will face new technical challenges, new political battles, and new attempts to define what Bitcoin should become. The real takeaway from Lyn Alden's warning isn't that Bitcoin is in danger today. It's that the very qualities that make Bitcoin valuable, decentralization, immutability, and resistance to change, also require patience, caution, and extraordinary consensus whenever the network confronts major decisions. And as the next bull market approaches, that tension may become one of the most important stories Bitcoin investors need to watch. If you found this analysis valuable, make sure to hit the like button and subscribe to the channel for more in-depth Bitcoin and macroeconomic insights that you won't find in the mainstream media. And I'd love to hear your thoughts on this debate. Do you agree with Lyn Alden that Bitcoin's resistance to change is one of its greatest strengths? Or do you think the network needs to become more adaptable to address future challenges like blockchain bloat, inscriptions, and eventually quantum computing? Should proposals like BIP 110 even be considered, or would that set a dangerous precedent for Bitcoin's future? Let me know your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.